Welcome to the Wealth Wisdom, where knowledge becomes power and power builds your future.
Hey guys, welcome back to the channel. Today we're breaking down to companies operating in completely different industries, but both shaping the future in their own ways. One is pushing boundaries in semiconductor memory technology, powering aerospace, defense, automotive, and industrial applications. The other is tackling one of the world's biggest environmental and industrial challenges: the transformation of plastic waste, heavy crude, and renewable materials into cleaner, more sustainable outputs. And yes, these are two stocks that many investors are watching closely. Before we get started, remember this video is for educational and informational purposes only. Nothing here is investment advice, financial guidance, or a recommendation to buy or sell any security. Always do your own research. Before we dive in, please take a second to hit the like button, share it with your friends, and also subscribe. Please help this video get at least 500 likes. It really helps to support the channel and keeps us bringing you the latest market insight. Thank you. Let's start with Everspin Technologies, a company based in the United States and operating within one of the most important and fast-changing industries today: semiconductors, specifically MRAM, magnetoresistive random access memory. Why does this matter? Well, think about industries like aerospace, defense systems, automotive electronics, industrial robotics. What do all these sectors have in common? They all need high-reliability memory that can handle heat, radiation, constant data writing, harsh environments, and critical performance needs. That's exactly where Everspin plays, and recently, the company released its third quarter 2025 results, giving us a clearer picture of its performance, strengths, and risks going forward. Let's break the numbers down slowly and analyze figure by figure. Total revenue was $14.1 million. This compares to $12.1 million in the same quarter of 2024. That's an increase of $2 million year over year. In my view, Everspin is still growing. The demand for its MRAM solutions remains solid. Their core markets, aerospace, automotive, industrial, are likely expanding or adopting more MRAM into their designs. But the real question is, where did this revenue growth actually come from? Let's go deeper. RAM product sales last year were $10.4 million. This year, the company added to $0.3 million in product sales. This is important because product revenue is typically more predictable than licensing revenue. MRAM demand seems to be increasing, possibly due to more industrial systems using MRAM for reliability, automotive electronics requiring faster, tougher memory, and aerospace and defense-grade systems needing fail-proof data solutions. And this revenue came before the impact of their newest expansions, including new PERSYST MRAM products and collaborations with Lattice Semiconductor and Quintaris. So you have product revenue rising. But what about the other side? Licensing, royalty, patent, and other revenue came in at $1.40 million, a slight decrease from $1.7 million in 2024. Is this a red flag? Not necessarily. Licensing revenue often fluctuates because it depends on contract timing. What matters is that product sales, the core of the business, are trending upward. Gross margin is 51.3%, up from 49.2% last year. Margins improved by 2.1 percentage points. This shows stronger efficiency, likely better product mix, maybe more STTM/RAM sold, and possibly improved cost structure for semiconductor companies. Crossing 50% gross margin is generally a positive sign. Corp operating expenses are $8.8 million, up from $8.1 million. Expenses increased about $0.7 million. Is that concerning? Not necessarily. Business growth often brings higher expenses. They might be investing in R&D for new RAM generations, expanding partnerships, securing aerospace and automotive certifications, or growing sales and marketing for new PERSYST products. The key question is whether revenue is outpacing expenses. In Everspin's case, revenue grew faster, but profit tells another story. Corp net income is $50,000, down from $2.3 million last year. That's a big drop, mainly because interest and other income dropped from $4.4 million to $1.60 million. This shows how much Everspin previously benefited from interest income, likely due to high interest rates or investment gains, and those gains did not repeat in 2025. Non-GAAP net income is $1.5 million, down from $3.8 million. Even after excluding non-cash charges, profitability has tightened. Looking at their cash position, $45.3 million, up by $3.2 million since December 2024. That's a strong positive sign. More cash means more flexibility to fund R&D, expand product lines, and invest in new technologies. For semiconductor companies, strong cash is essential to weather cycles. 3 major updates strengthen Everspin's long-term positioning. Expansion of the PERSYST RAM family for aerospace, defense, automotive, and industrial markets. Collaboration with Lattice Semiconductor to integrate MRAM with FPGA platforms. Partnership with Quintari supporting RISC-V architectures, which are rapidly expanding globally, especially in automotive. All of this signals growth potential, but also risk. Semiconductors remain a cyclical industry. Risks include exposure to global supply chain disruptions, fluctuating licensing revenue, sharp decline in net income, competition from flash, DRAM, and emerging memory technologies, dependence on industrial and aerospace markets still. The company maintains strong positioning in a specialized niche. Now let's shift to a completely different world. Clean technology, advanced recycling, and sustainable fuels. We're talking about Arduro Clean Technologies. Arduro operates in the environmental and industrial innovation space focused on advanced chemical recycling of plastic waste, upgrading heavy crude oil, and converting renewable oils into sustainable fuels and chemicals. Their total addressable market is enormous, over $150 billion. So where is Arduro now? Let's break down their Q1 2026 earnings. Arduro reported revenue of $44,500, a decrease of 19% compared to $55.00 in Q1 to 5. At first glance, This drop raises questions, but Arturo's revenue model is very different. Their earnings mainly come from evaluation and collaboration services carried out through customer engagement programs. These projects vary depending on timing and scope. Revenue at this stage is not a measure of long-term potential. It simply reflects where they are. In the early commercialization cycle, loss from operations is $6.3 million, up from $2.46 million. The increase is mainly due to higher non-cash share-based compensation, revaluation of derivative financial liabilities, more R&D spending, more scale-up activities, hiring new employees, and additional expenses from the Nasdaq listing. Losses have widened, but the reasons are consistent with a company's scaling technology and building infrastructure. Adjusted EBITDA is negative to $0.5 million compared to negative $1.7 million last year. Again, deeper losses but consistent with scaling. Cash position increased to $15.09 million from $6.96 million. They more than doubled their cash, which is a strong indicator of momentum. It ensures they can continue pilot projects, engineering, and commercialization work to important strategic updates. Successful pilot-scale steam cracking of plastic-derived hydrochemolytic oil, major progress in plastic to feedstock conversion. Non-binding LOI for a demonstration plant site in Europe, an important step toward commercial deployment. Arduro is still early stage, with low revenue, high R&D spending, and dependence on pilot success. But the TAM is huge and progress is steady. Now, comparing both companies side by side, Everspin is generating $14.1 million in revenue and growing year-over-year. Arduro reported $44,500, which fluctuates due to the nature of evaluation projects, not product sales. Everspin is profitable, though earnings declined due to lower interest income. Arduro is operating at a loss, typical for early-stage clean tech companies. Everspin's cash balance is strong at $45.3 million. Arduro holds $15.9 million, solid for its stage. Risk levels differ. Everspin operates in a more established but cyclical semiconductor industry. Arduro carries higher risk because it is early in commercialization. Everspin's growth depends on RAM adoption in aerospace, FPGA platforms, and RISC-V systems. Arduro's potential is linked to massive environmental and energy markets worth over $150 billion. Disclaimer: this video is for informational and educational purposes only. It is not financial advice, and I'm not a financial advisor. Always do your own research before making investment decisions. Investing involves risk, including the loss of principal. If you found this breakdown helpful and enjoy deep, factual, analytical stock coverage like this, make sure to like the video, drop a comment, and subscribe to the channel for more educational analysis. Thanks for watching, and I'll see you in the next one.